Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Stuart Kaiser of Citigroup joins us with a really very different outlook is U.S. equity trading strategy. Do you assume after the tensions of back to school, the summer of September, rather, in that, is there typically a bull market rally at the end of the year? Into November, is there sort of a dash up typically at the end of the year?
Yeah, I mean, typically, seasonally speaking, it's April, November, December are kind of your best months of the year. April's obviously a big earnings month, and everybody gets their tax returns, which is nice. And if you get them, and then you do get that year-end rally. Typically, tech actually does well into the year-end. You get the quote-unquote budget flush of these big tech, tech budgets, and that helps. So once we get through September, which is usually a tricky month, it does look up. Yeah.
So smart guys like you are looking at a lot of dynamics, pro dynamics, and I want you to address this. We're not extended right now. There isn't this exuberance. There isn't this frenzy when you look at a lot of different mathematics. Describe that.
Yeah, look, I mean, there's certain areas of the market that do look kind of rich and extended, and that would be more your AI trade, so to speak. And then you have the rest of the market, which does have space, I think, for people to rotate into and own. And I think you would argue, Tom, that like the earnings growth we've seen in that growth AI area, like largely justifies, the type of rally we've seen in those stocks. So if you are concerned with valuation, you look at that number and it looks very high historically. But I would argue that right now, a lot of that valuation is being driven by a small cohort of stocks that is generating tremendous amount of earnings growth.
How about small cap and value stocks? Are they going to have their day at any point in our lifetimes?
Look, it does feel like we got a little bit of a move in there in August as people kind of tried to broaden out the rally. We think there's a very narrow sort of set of data or narrow channel for those stocks to work. And I think for that to happen, you would need something that looks like a reacceleration in U.S. economic growth. Okay. If you were to look at small business surveys coming into the year, optimism was near a 50-year high. Unfortunately, uncertainty was also near a 50-year high. So, I think for small cap to work, the bull case would be we got the new tax and spending package, right? We got, a little bit of clarity on tariffs. The immigration stuff is a little bit better known. Once you remove those uncertainty, can that optimism take hold and push you higher? Mm-hmm. I would say yes, if. And the big if is the labor market. And we're going to get a lot of information on that over the course of the next 2 days.
What's the sentiment out there from your perspective when you talk to your institutional clients out there?
I think, the base case right now, I think, is a slowing economy that doesn't go into a recession, inflation that's generally under control, and a couple of rate cuts. And that's a pretty kind of bullish mix positioning probably now. You'd probably put it as something like 8.5 out of 10. I mean, people are invested, and there is a view that the economy is slowing, but it's not going to go into a recession. The issue with that is a slowing economy, you start to get down close to those key important levels, whether that's payrolls or other economic data. And when you're near a precipice, there is a lot of risk and uncertainty. So I would say maybe cautiously optimistic is the way I'd put it right now.
I loved you in season 2 of Billions. I thought it was really good. Stuart Kaiser, you hang out in that milieu. Basically, the summer zeitgeist is retail got it right. The fancy people got it wrong. Let's readjust to September here. What are the hedge funds doing? What are the CTAs doing? These are trend followers, folks. What are they doing? Do they have a leverage exuberance? What's the tone out of the fancy people?
I think just what you said, a lot of those investors are kind of trend following. The one thing this year has not had is a lot of durable trends, right? We've had a lot of very violent reversals in both directions, and that's been really, really painful for a lot of those levered investors. So again, if there's an area where you could add risk right now, it would be in quote unquote leverage and people getting a little bit more confident having that risk on. So look, those investors, I think, as I mentioned, what the base case is they're generally bullish, but they're in a relatively safer, narrower group of equities. And I think they're going to stay there unless they get really convinced in what I would call kind of the Uber bull case. And the Uber bull case is that corporate America took a siesta in the second quarter because of all the uncertainty that was out there. And now that we have more certainty and you're getting near the end of the year when budgets need to be spent, do you see corporate America go on a little bit of a hiring and spending upturn going into year end? That's not a base case. I think that is your bull case story. It's going to take some convincing, but I think we saw some early signs of that during the last earnings season. So again, Tom, I think people are long, but they're long in a relatively conservative way, and they need some evidence to change that view.
Stuart, thank you so much. Stuart Kaiser with us with Citigroup. We'll have him on often here. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Constance Hunter, she's with EIU, the Economist Intelligence Unit, and a senior advisor of macro policy perspectives. The balance now of Fed debate, and not just the certitude of 25 beeps coming up, but the inflation labor mandate. What's that balance, that teeter-totter? What's it look like right now?
Yeah, I mean, it's on a knife edge. I mean, as I wrote last month, the Fed is in this, what we would call a sticky wicket. And the sticky wicket is when the grass is wet and the batter doesn't know where the ball is going to bounce. Yeah. So it is this knife edge. And the thing is, the Fed does not want to see a recession, obviously, but they also don't want to see inflation remain elevated. It has been above their target for months now, years now. And while it was coming down steadily, where we're seeing the stalling is in the services sector.
Get out front of Anna Wong coming up here. September 9, these BLS revisions. Is it Stephen Englander right at Standard Chartered? This is a big deal?
I mean, is it a big deal? I mean, it comes out every year. Mm-hmm. It's really important to do. If it gets revised, if we see big downward revisions, that changes the picture, right? And it's going to have more weight because the Fed is either on the precipice of doing one rate cut or doing a series of rate cuts. And that is going to tip the scales with regard to how much they move.
In your notes, Constance, you say tectonic plate shifts are causing changes to macroeconomic growth drivers. What do you mean by that?
So we have so many things that are changing, right? We're in the midst of this massive advancement of general purpose technology with AI that is changing the way companies work. Is the downturn in hiring of new college graduates because in part of AI? Is it the economy? Is it the way they're intersecting? We have tectonic plate shifts in terms of how the U.S. government is running both commercial and security policy, which are increasingly intertwined, and not just here, but globally. So we're seeing a rise in industrial policy, state nationalism, the U.S. taking a stake in Intel, for example. Yep. This is a tectonic plate shift from the 80 years following World War II, where the U.S. basically led what we would call a cooperation game amongst its allies in the global economy. Now we see the U.S. retreating from that. We see China ascending. We had the Shanghai Cooperation Organization meeting last week ahead of this military parade in China. We had world leaders there, Iran, North Korea, India, Pakistan, Russia. It's a very different type of alliance, and China is really trying to fill that void. That is a tectonic plate shift in the global world order.
Yep. So is the U.S. economy, the Fed, is it still the key issue for investors globally to focus on, or we saw earlier in the year, some assets leave the U.S. and go to other parts of the world?
We are still the largest market, obviously, in terms of the economy and in terms of the asset market, right? When you think we have deep and liquid capital markets, the deepest and most liquid capital markets. But what you're starting to see globally is this tendency for countries to increase fiscal spending, whether it's on military, whether it's on an older population. Right. And so you're seeing the long bonds react to this globally. And of course, the U.S. is still an attractive place, but how businesses operate in this new global environment, I think, is going to be very different over the coming decade than it has been for the previous several decades.
Because, I mean, we just have productivity numbers today, folks. They're quarterly, they're dated, they're distant. I mean, everyone from Constance Hunter to anyone in productivity will say you got to look at 3 years, 5 years, 10 years tendency. Do you have a handle on what AI and productivity is doing in America? Or are people like you just making it up, report to report?
Well, I will preface this by saying I don't think economists fully understand productivity. It is the big sort of black hole mystery.
I mean, total factor productivity now. My habits with AI have radically changed. It's like 94, 95. Am I right?
Yes. I was programming a spreadsheet last night, and I was like, oh, let me just double check, because whatever, I'm old. I haven't kept up with all the Excel VBA programming, and I plopped it into ChatGPT. I want to program a spreadsheet to do this. I need these things. It kind of came up with the syntax. I plugged it. I created a spreadsheet. I plugged it in. I tested it out. It worked. It took me, 20 minutes to get this up and running. Whereas, I didn't even know what the syntax was. I just asked it what I needed it to do. It did it. I double checked it. I eyeballed it. But for that type of thing, it is a game changer in terms of productivity.
So should we cut Jerome Powell? I'm going to go here, but should we cut Jerome Powell some slack because of the times we live in?
I mean, we should cut Jerome Powell some slack because he is doing a very tremendously difficult job under very difficult circumstances, and he is doing it exceptionally well. He is safeguarding that dual mandate and keeping inflation expectations anchored, while also being sensitive to the fact that the underbelly of the economy is slowing despite extraordinary resilience.
Constance Hunter, thank you so much with EIU and also with macro policy perspectives. Really good perspective there on the dual mandate of a Fed. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Let us switch gears now. Monica Guerra with us, head of U.S. policy at Morgan Stanley Wealth Management. And there's this could be truly a domestic 1 hour conversation. Open question to get September started. What's the number one thing in the linkage of finance to the Washington uproar that you're focused on? What's the paragraph you're focused on right now?
Outside of tariffs, because that's a whole separate conversation, I would say, honestly, government shutdown, because you have to think about
it's more likely now, right?
More likely now. We're really paying attention to that, because outside of this uncertainty around debt and deficits, if then you add in some of the restriction that comes into play around a shutdown, that could create some additional volatility. So we're kind of watching the marriage of those two events.
So where are we on that? What's the Morgan Stanley calling a government shutdown?
I would say I don't want to say bullish on it, but I would say compared to prior instances, there's a higher likelihood today than, say, the last time around. Now, the one factor
that we will get a shutdown.
Okay. Now, the one factor that could move the Democrats, forward is if you get a shutdown, then there's the potential for the president to come in and start slashing budgets. Now, there is a window there where if they don't move the needle on the budget, they don't get a continuing resolution, the president then can come in and cut where he wants.
Who gets the political blame if the government shuts down? Is it the government? Is it the party that's in power? Is it the opposing party? How does that play out? Because it's got to be huge political ramifications.
Typically, it's the opposing party, right? If you're saying, we have this agenda, they're not coming to the table. What you normally see historically is that Democrats tend to be the good government, types, in the sense of, not that GOP is not good government, but in the sense that, they're not willing to go as far on political brinksmanship in some instances, especially as it relates to government shutdown. And that's really led by a Schumer and sort of Pelosi culture. Now what we saw in the last time where earlier this year, where Schumer did push the party, right, to move forward on a continuing resolution, you got a backlash from Democrats, right, from the actual voting base. So I think that there's a real tension here that Democrats haven't faced previously, where they're looking for hardball versus, dealing with the political realities that it could give actually the White House more leverage to cut.
Tariffs, it looks like they are going to the courts here.
Yes.
How are you guys kind of playing this out?
So for us, our base case is that tariffs are likely to happen. It's just how and how much. Supreme Court, we do think that it's likely to rule in favor, right, of the president. If not, there are many other sections of tariff law that they can use, right? They're looking to other federal authorities as well as we speak. That they've said that out loud, right? That this is something that they're not going to let drop.
From where you sit with Monica, with your wonderful skill, I've got to get this in. We've got ADP folks at 1 minute. But Monica, from where you sit, is there a basic idea here of the judiciary to the rescue? I mean, every time I look at my phone, there's another court case, whatever. Is that what we're going to live with? Here's now, it's endless court cases?
I think with this environment, yes, because you have an administration that's willing to use blunt tools, right? And when you use blunt tools, you're missing some of the nuance that then gets adjudicated, right, and gets taken to the courts. So I think in this administration, we're going to continue to see more.
Monica, thank you so much. Too short a visit. We got to go to economic data here to start a busy labor week for Ellen Zentner and others. Monica Guerra is head of U.S. policy at Morgan Stanley Wealth Management. Too short a visit. Stay with us. More from Bloomberg surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
This is Joy. Ben McMillan with us with IDX Advisors. And I want to go into the gold angle here in a moment. But I want to explain to people, like Imperial College in London is sort of like Caltech, MIT, like the grind and all. There is no grind, Paul, in London, like econometrics at the London School of Economics. Like the undergraduate course, which I've enjoyed, is brutal. It's where they weed people out. Everybody goes off to international relations. What was it like, a graduate degree in economics at the sweatshop known as LSE?
That's very accurate. Grind is the appropriate term there. I always make the joke, I know what it's like to be in the LSE library, on Christmas Day, because it's just a lot of studying. The other thing too, a lot of people don't realize is, it's probably still this way, is the end of year exam is 100% of your grade. So, so you got to show up and have a good day.
If you're me sitting there, when you get the differential equations, I just put an X to the answer and moving on.
Yeah.
That's how brutal it is. Ben McMillan with us with all that academic ability. You are tangential to Van Eck, who literally invented how modern Americans invest in gold. How are we investing in gold in 2025?
Well, I think the big conversation there is to just put gold back on the map for a lot of investors. I mean, we've had conversations coming into 2025, 2024, where a lot of clients, a lot of investors were still kind of looking at it as a less interesting asset class. And of course, somebody sent me the Bloomberg chart yesterday of foreign central bank holdings of treasuries versus gold going back to the 80s. And for the first time since the mid 90s, foreign central banks are now holding more gold than treasuries. Wow. So this is a secular tailwind. This is a powerful shift, and it goes back to the kind of the roots of Van Eck, Austrian economics. When the fiscal deficits and debt gets too high, right. When monetary machine goes off the rails, gold is the safe haven.
Quick aside, my book of the fall will be Cass Sunstein on liberalism. Cass Sunstein writing up with love for Hayek and the Austrian School of Economics. Nobody saw that coming. We'll do that with Cass Sunstein here in the coming weeks.
Ben, looking at your notes here, gold has doubled since 2023 and could double from here over the next 5 years. What's going on there?
So again, I think the big thing to keep in mind there, and we were kind of pounding the table on gold, not because we're gold bugs, but we just saw structural asymmetry in that trade. And I'm reluctant to even reference it as a trade because, again, we think it's kind of a secular change in the world monetary order. In many ways, it's kind of the other side of the bond vigilantes coin. Actually, Tom, you on the show a couple of months ago said, is the gold market sending us a signal? And it absolutely is. And it's the same signal the bond vigilantes are sending us. And unless, when you look at kind of G7, it's not just America. What's going on with long yields across the G7 nations, all of that really argues for gold as a safe haven. There's a lot of factors there at play, not the least of which, too, is I think a lot of the shine coming off the dollar. And we've obviously seen the dollar come off of a 12 or 13-year bull run. But the guest from Macquarie, Dr. Wiseman, I think summed it up very perfectly, where he talked about, dollars now moving from ordered liberty to managed chaos. And I think even that's part of people now looking at U.S. dollars no longer as the safe haven that they once were and finding refuge in gold.
How about silver? I'm just looking at silver on my GLCL, Global Commodities Price chart here. Function on the Bloomberg terminal. It's up 40% this year.
Silver is interesting because, silver, and the Van Eck guys will tell you this, has always been kind of interesting because there's a more robust industrial use case there. And I think, in particular, if you look at the silver to gold ratio, which is, one of the dozens of indicators we look at, it was, comparatively undervalued relative to gold, historically. So there's kind of a technical basis there for an uplift. But I think also equally interesting is when you look at a lot of the Chinese demand for solar panels, which they've got Xi Jinping has big plans for solar. These are new types of solar panels that are going to use more silver going forward. So I think that industrial use case now also has a bid under it. But again, when silver and gold start moving in tandem like that, that's also the signal, that the bond vigilantes are sending us that this is inflation safe haven.
So you got a price moving up. What's the persistency of gold held at central banks? Like, is that a forever hold? Or do you sit up at night and go, OMG, the Banque de France is going to sell?
Well, that is the big question. And that's one of the reasons we're more secularly bullish on this kind of shift in the demand curve is because, again, if central banks are buying at this rate, that's a ship that's unlikely to turn around, anytime soon. This is, they're selling treasuries, they're accumulating gold. This isn't a bet that a speculator is making. Or even if you look at ETF flows, that's obviously more speculatively driven. This logistically looks and feels much more secular in nature.
We mentioned Van Eck earlier. The heritage folks, it was like John Templeton in global investing. This was all new, odd. John Van Eck invented it all. And at that time, mothers held Krugerrands in their dresser drawer. Are we back to that emotion?
I think so, to some degree. And you're in the conversations we're having with clients, I had a conversation with a client yesterday and he's talking about, buying 10-ounce silver bars. And so, there is a very...
At Costco.
At Costco now, exactly. So that's very much back in the zeitgeist of just kind of holding, American Eagle coins or silver bars under the mattress, so to speak.
Is there never too much econometrics?
I can attest. There's absolutely too much econometrics.
Folks, this is a joke. We're making jokes here, but a lot of this comes out of the incredible academics. Good Morning Canada and British Columbia. But a lot of people look at this stuff. And I've talked to Engel about it, the Nobel laureate at NYU, Robert Engel. But I really wonder the value of the micromathiness of econometrics in the day-to-day grind.
Well, I'll tell you, Nobel laureate, Robert Engel. That was part of my thesis at LSE. For those that don't know, he was instrumental in developing a kind of a novel volatility model, and we still use derivations of that in our models today.
You use Garch every day.
Absolutely.
Every day.
Absolutely.
I got goosebumps, folks. I can remember when I was going down in flames with Garch. We'll have to see. Ben, this has been brilliant. Don't be a stranger. Ben McMillan with us with IDX Advisors. Can't say enough about the interesting dovetail here, what's going on in gold and going on in fixed income with yields up.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.